All right, guys. So I've got Mike on the channel here. It's great to get him on board. It's an absolute privilege for him to give his time, out of his day to talk about what is going on in the cryptocurrency sector, the blockchain sector. I know Mike has got years and years of experience, as working in a media organization. I'm just a guy on the internet, trying to educate people about what is going on about cryptocurrencies. So none of this is like intended as financial advice. This is just simply an education interview, something that I'm very fond of. I know Mike is quite fond of it as well. He's been around talking about it and, explaining to his people what is going on. And we like to get down to things here. We like to get down to business. We like to know what is happening in this sector, what is going on. So do take this as an educational interview, and I'm sure my audience are all going to be gearing up to hear it and listen to what Mike has got to say. So he's going to last about 20 minutes, and it's great to have you, Mike.
Well, thanks for having me, Nazar. It's a pleasure to meet you. This, to me, is one of the things I really enjoy what I do. Is I publish for Bloomberg Intelligence, and everything I do is based on what is best for terminal readers, and it trickles down to things like this. I'm completely institutional focused, and what I really enjoy, I've been here almost 6 years, is I'm completely unbiased. My main bias is getting it right. So all markets, and I'm not a seller or a buyer, not buy side, sell side. So that's one thing I really like. So I'm just going to give you facts of what I think is happening and where it's going. And like, people hated me in 2018 because I was bearish, but so far they haven't hated me since. It's been about April 2019. I've been bullish since about then.
Like I say, it's an honor to have you. So Bitcoin 2021, here we are. It's 4 years later. A lot has happened. A lot has changed since then. There's heaps to talk about, but we'll try and keep this 20 minutes long. So how do you see Q4? I mean, what's going on with Bitcoin? How do you see Q4 playing out? I know we're going to go back to forth with these questions. So we're going to start off with market sentiment, and then we're going to talk about regulation and so forth. So we'll make it a little bit different this time around. How do you see Q4 playing out?
Well, I see Q4 for Bitcoin as almost a perfect storm for higher prices. Number one, we've had a significant correction, backed up 50%. So that flushed out speculative excessive longs, which the market really needed. And it's now the underpinnings for higher prices are quite strong. So I think the good floor now is 50,000. Before 30,000 really held, it creeped up to 40,000. I think Bitcoin's heading to 100,000. The question is when. Now let's just focus on Bitcoin. So what's really happened this year is institutions are clearly getting into space. I mean, we've heard what's happening with adoption. The reasons it went down were quite bullish. Bearish short-term, bullish long-term, i.e. China pushing back. The joke I heard recently is you don't have a good Bitcoin bull market unless you have China pushing back and Jamie Dimon pushing back. So we have that. That's great. And then also what's happened, of course, technicals, fundamentals, Elon Musk, El Salvador, all that accumulating. And all key thing to remember, I think, for our listeners is that bell curve, that pendulum of the naysayers has swung way far towards the other side, where if you're an institution and you're not allocated to this best performing asset in the history of mankind, you're looking like you're falling behind your peers, and you're potentially losing money, getting fired. That's happening. The key thing I'll end with is what just happened with this U.S. debt ceiling drama, I think really accentuated the lack of drama in Bitcoin code. Supply is like this. It's going down 900 coins a day by code to 2024, then 450, and then it drops. Straightforward, that's it. That matters. So I'm a commodity guy. Supply is going down. All that matters is the demand and adoption. Those are clearly up. So I see Bitcoin just setting up for the next launch higher, similar to what it did in Q4 last year.
So you're pretty optimistic in terms of where we're going. Do you think that's predominantly because of El Salvador, or do you think
no?
No, right. Okay.
All the above. I mean, that's part of it. El Salvador is the first to adopt Bitcoin as a major as a currency, and I guess not as a currency, as a store of value, digital global. I view it as a digital reserve asset in a world that's going digital. And the thing is, what's happening is things that were predicted in the book, The Bitcoin Standard, this by Saif and Namas. Now, I read that a few years ago. I disagreed with it, but every day that goes by, it's the key thing about Bitcoin. It's very humbling, and those who do not get humbled, which I have been, and like to always, it's good to be humbled, risk falling behind. So to me, that's what's clearly happened. El Salvador is just a tree in the forest. The forest is just growing massively. To me, the next key dangling carrot is it's U.S. regulation. It's not going to really mess with Bitcoin. There's not much you can do about Bitcoin. I mean, unless we ban the internet. But what China just did by pushing back on our cryptos means U.S. is much more likely to embrace it with regulation. And the key focus is crypto dollars. Crypto dollars are just trickling down from Bitcoin and Ethereum, but it's an indication of what the world wants organically. The ability to trade digitally 24/7, transact instantly, virtually no cost, and in crypto dollars you can earn interest. So to me, that's what's happening in the infrastructure. U.S. regulations unlikely to mess that up. The key dangling carrot is U.S. ETFs. The key thing about U.S. ETFs are they add legitimization to the space, for most people can then say easily, it's easier to get across your board of directors that click, I need to allocate some Bitcoin to my treasury because I'm earning 0 on bonds and negative in most of the world. And that's going to happen. It's going to be a baby step with U.S. futures, which really are not significant, but it's just a matter of time to have normal U.S. ETFs in the U.S. attract the physical, because the U.S. is really starting to fall behind. And that's been made very clear to the SEC and to regulators by most people in the space. A good example is there's more than 30 applications now in the U.S. and people like Abigail Johnson at Fidelity are saying, hey, guys, you got to catch up. Canada, Europe, Switzerland, Sweden are all kind of moving forward to this world, this country that's supposed to be a bastion of free market capitalism.
Yeah, I totally agree with that sentiment, Mike. I think, the US has to play ball in terms of, we're going to talk about regulation in a minute. So you think Bitcoin's here to stay in that sense?
Well, that's the key thing that trickles down every day, is that pendulum of naysayers is it's accelerating the other way. Every money manager on the planet all knows, okay, I got to be in this space. So what just happened the last 2 weeks is Bank of America and JP Morgan, and 2 premier US banks, came out with research reports that were very bullish. And the key thing I've been seeing on the tape for over 2 years is every institution gets in this space has one primary reason, because our clients are asking for it. Even Jamie Dimon said that. So to me, it's just people get it, money managers get it, the competition. And then there's this issue that, whoa, okay, this asset is revolutionary. Yes, do I want to be, hey, Blockbuster, what do you think of Netflix? I mean, 20 years ago, do I want to be there? Exactly. So, and so I heard a great podcast from Laura Shin yesterday from the leading crypto guy at Visa, where there's so many smart people who get it that, hey, we're in the payment business. This is where payments are going. This is where money's going. We've got to be in it. We can't be left behind. And to me, that's part of it. And the key thing to remember is Bitcoin's a global digital reserve asset. The key thing I really got wrong this year was I thought there'd be more upside in gold, but the money is, millennials don't want gold. They want Bitcoin.
So they change their narrative, you think, these institutions now from pre-2017 level to now, you think, right?
Yeah, that's what I said. It's completely shifted. It's just going through the iterations of adoption. ETFs are part of that. There's still a nascent part of all portfolios. So I've done a lot of research. Like I said, I publish on the terminal. So if you see my eyes darting around, it's because I'm watching screens. I'm watching the Bloomberg terminal, watching prices. But in institutions, I point out how Bitcoin added to a bond portfolio, just a small amount, has an ability to lower your total risk. Low correlations, and obviously know it does for performance, but then look forward to the next 10 years where what's happening with bonds, they're kind of melting ice cubes compared to inflation. At least Bitcoin gives you that diversified portfolio edge, which from an institutional standpoint, that's all you care about. Superior performance, lower risk. Bitcoin allows that. So if you add 1 to 2% of Bitcoin to any portfolio, it doesn't matter at all if it
Right.
fails, which is very low probability. But it does matter if it simply keeps doing what it has been, potentially at a slower, less aggressive pace, which is what I expect. And I expect volatility to go down. The whole space is just, it's all just naturally clicking into space. Key thing I worry about is what trips it up. And this year it had some major things to trip it up. And just like the 1,000 cuts, Bitcoin just survives.
Thanks, Mike. I think that's a clear enough answer to the audience and learning about that. So the next question is let's talk about all this FUD that sort of come along since the Elon Musk, China banned it. We had the regulations. I call this the year of the FUD. And there's a few other guys that agree with me. How do you see all this FUD that sort of come out in the last few months?
It's all part of a good bull market. Bull markets ride walls of worry. And I got so bullish when the market dropped to near 30. Now, one thing I got, and I think most important thing for a good investor and a good person to do is own your mistakes and see what they matter. So I really missed the fact that when Bitcoin dropped from 60 to 30, I didn't think it'd go much below 40, and boom, it got down to 30. But the key reasons were very bullish. Part of it was FUD from Elon Musk and energy use. And you dig into the energy use, which I've done with Michael Slater, with the Bitcoin Energy Council, and you realize, wow, Bitcoin's doing some major positive things for harnessing energy and doing and properly using it to advance humankind, which is the essence of humanity. It's doing that. Most people just understand it yet. So, okay, that FUD's pushed back. We got that. Yes, it uses energy, but so does we right now. Look at these lights, what we're doing. And the other thing, China, that has been the paradigm shift. Here's the key thing I look at China. So I'm a commodity guy. China is the gold center of the universe. They mine the most, and they're actually it's a gold's in their culture, and with India too, but they're trying to, they hate the fact that U.S. dollar is a dominant currency, despite the fact that their portion of total GDP is increasing and U.S. portion of total GDP is increasing. But the fact that the dollar is gaining dominance in digital assets, I was shocked when they pushed back completely on cryptos, because I thought they would understand the risks of not diversifying your gold holdings in Bitcoin. Now we saw the limits of Chinese system. Closed communist surveillance state, no free flow of capital, no free discourse. Good luck, guys. And now, one thing that's Trump pushed in this country is bashing China gets votes on both sides of the aisle. So the U.S. is going to look at this and say, hey, China's pushed back. It's just human nature to embrace it with regulation. So that's what you're seeing in the U.S. right now, is this great discourse. Yeah, just like Brexit, it sucks to watch, but it's so important. Get through that. To me, that's going to launch this into the mainstream. And there's not much they're going to do about Bitcoin. Also, the key thing about cryptos in this country is it's the job-making, creating machine. I know it's in England, in London, but in this country, I mean, I'm in Miami for a reason, because it's just, Mayor Suarez was on the Bloomberg TV yesterday, pointed out, and he's just making.
You're right. There's so many.
Yeah, and when you're a politician, you want to push back on jobs. So I was kind of shocked by this recent comment by Jamie Dimon, where he says he doesn't care. It's like saying you don't care about the unbanked and the poor people in the world who really gain major facility and value out of being able to store some wealth and not be pushed into peasantry like their ancestors have, like me. I mean, why do most of people like me come to America? Because we were European peasants and we wanted a better life. And so to me, that's things that there's a lot of Western elite that don't get it, but most of the world, like in Miami, where there's a major exposure to South America, people here really get cryptos.
That's amazing. I can see how it's really developed the last few years, and especially in Europe. Europe is really embracing it. We have ETFs in Switzerland. We have the German ETFs coming out, and they've already been out. The UK is also looking into it. I know Canada has an ETF. What's going on with America? So let's talk about ETFs, and then that's the next question. Yeah.
Yeah, so futures-based ETF, this was our prediction back in February. It's a fact. It's got to happen, or the U.S. regulators have to make the rest of commodity ETFs that track futures redundant, because there's ample volume and CFT-regulated Bitcoin and Ethereum futures. That's a done deal. It's a question of time. It's a good baby step. Now, I think the SEC is realizing their pushback on the regular Bitcoin, which started ETF, which started with the Winklevoss twins application 2013, is making them look like they're lost in space, because it's a classic case of people not understanding the US and saying, hey, blockbuster. What do you think of Netflix? And so, oh, I don't care. Well, you're gonna have to. So it's too late. It's already legitimized. It's just a matter of time. And it's just a question of how the U.S. regulators are going to do it. But one key pushback I heard that's really good is the fact that all the mining has left China and now it's kind of centered towards the US is really good for that base. And the key thing I like to point out is because I know a lot of my readers are US leaders and people who have terminals and decision makers. And that is, I just like to point out the simple facts is I'll leave you with this. The most widely traded crypto assets on the planet are crypto dollars, stable coins, or as Mr. Gensler called them, stable value coins. That's where the regulation is going to come, but it's just a better way to live and transact. It's like, do you want to go back to riding a horse to the office? Good luck. We drive automobiles and have good public transformation work remotely because of rapidly advancing technology. That's happening in finance. It's happening digitally. And most of these new advances are Ethereum tokens. The way I like to describe it, I'll leave you with this, is you can't hold gold anymore without holding some Bitcoin in that, having some Bitcoin in that bucket. You got to have some Ethereum in there too. And this whole infrastructure is just example of the US crushing China by doing nothing because it's going organically to the dollar.
Yeah, that's pretty clear cut. So do you see some ETFs pending this year? Do you see, are you hopeful?
Yeah, so the futures-based ones will be launched. I have my colleagues on the ETF side at Bloomberg, James Seifert and Eric Balchunas, good Lithuanian, I'm Lithuanian, have predicted that. It's just expected. It's a matter of time. It's the next iteration that's really going to matter because to me, this is just a baby step. There's one prominent manager said it's going to put a peak in the market. I think that's very unlikely. But here's the way I view it. There's going to be some point in our future where there's going to be wide dissemination of ETFs that not only track Bitcoin, but cryptos. Like we have the Bloomberg Galaxy Crypto Index, and I look at it as institutions, that's what they want to track. They don't want just Bitcoin. An index that properly tracks the market is what usually happens with institutions. That's going to happen. I just didn't know when, and I just hope the U.S. regulators don't mess it up too much because if it doesn't happen with the U.S., it's going to happen elsewhere. Canada moving ahead should be a major dangling carrot. Hey, guys, the unique thing about what happens too with a lot of U.S. regulators, they leave and they go to private industry. And also, there's a legacy here. You don't want to be known in history as Aaron Burr, and the person who killed Alexander Hamilton. You want to be known as Alexander Hamilton, the person who really started the modern U.S. financial system. And that, to me, is going to kick in. There's a bit of history and destiny kicking in. And if they do mess it up this time, there'll be some point it'll just cycle it back and it'll just happen later. But to me, next year is a key year for regular ETFs. And I say the bottom line is until they're widely disseminated, I have to stay bullish to space because there's so much money just needs to diversify in that space. I didn't say they want to, they kind of need to diversify in this space.
So that's amazing. It's good to see regulatory clarity moving forward. I totally agree with all these sentiments. How do you see Plan B? Do you follow this guy and his stock to flow model? Do you think he's been talking a lot recently? I've seen a few of his interviews. He's predicting this model. How do you take it? It's not intended as financial advice, but how do you see this model playing out?
The lesson I learned in this business is respect success. And it's very straightforward. I see the same levels. I tried to replicate his model. My back test wasn't so good, but my forward outlook was very similar. I see the market going to 100,000 and plateauing for a while. Now, it could overshoot by up to 200 or 300, and it could come back and correct to 50, but I see it doing, Plan B has the market going to 100,000, and the stock to flow thing is a fact. It's really helped me educate. It's a key thing about the whole space. It just really lifted my education. I mean, I have a financial background about all monetaries, but Plan B makes a good sense about stock to flow. It's the reason I'm bullish gold and bearish crude oil, because higher prices will bring on massive amounts of supply of crude oil, but it doesn't do that for Bitcoin, and that's the stock, Plan B stock to flow. So I completely agree with it. I have plenty of other reasons why Bitcoin should get to 100,000. One of the most simplistic now this year is just catching up a little bit to the performance of Ethereum.
Yeah, and I do see Bitcoin leading, and I think it's become pretty important in the USA, especially. Would you agree in that sense? It's becoming more important in terms of a reserve asset, as like Michael Saylor says.
Oh yeah, well, I'm a big fan of Michael Saylor's. When I heard him, I think it was July last year, and comparing the history to a bridge in Rome, that's when he nailed me. I mean, my weakness for studying history and trying to extrapolate in the future is just part of what I do. And to me, that's what's happening. Bitcoin is the basic standard. What I look at is institutions are getting the fact that Bitcoin is a global digital reserve asset, and the world going digital. And it's very nascent. It's in the price discovery stage. So I love this argument that people say, oh, it's too volatile, it's not regulated. I'm like, yeah, great. When it's less volatile and when it's highly regulated, the price is likely to be much higher. So what do you want to do? You're going to wait? Probably allocate that. So I think that's a good, positive narrative for the space, most notably for the institutions. But you kind of, I think Bitcoin can potentially, like gold, is completely lost without Bitcoin nowadays. And Bitcoin is a bit naked if it doesn't have some Ethereum in that space. Now, there's the rest of the space too I find a little more complicated. That's why I love a good index. And to me, that's the way to go. Because an index will have a survivor bias.
Yeah, we're not here to talk about other coins, but Bitcoin is definitely here to stay. So my last question is regulation. Like we talked about it a little bit, and you see it coming. How do you see it playing out in the rest of the world, Mike? Do you see it?
Nazareth, I appreciate you going there, because this is part of what we're going to look back from the future like we did with duck and cover. I mean, I grew up when the Soviet Union was going to crush the U.S. and look what happened. I think we're going to look back at this as, okay, this is part of the beginning of the demise of China, communist system. We all know a closed kind of system like that, that doesn't have free flow of capital, that is not tolerant, and does not have free open discourse, will fail. It almost always has. It's just a question of how long it could survive, especially in this world that's rapidly advancing technology. And it's unique how this whole battle is centering now on cryptos. I think this is where it's going to be. We're going to look back at this from the future, and this is a defining moment. It's completely banned in China now. And a key way to look at it is it going to get worse? So here's the end game. The next key iteration, I think, from China is some alleviation of their strict rules against crypto, because they're going to realize they're falling behind. They can't keep up. They can't compete. It's just a fact. And I've been bearish on their economy for like last 2, 3, 4 years, because I'm just pointing out what's happened recently. It's just signs that China cannot keep up the pace of the rest of the world now. It's just impossible with their system. They'd have to change. Banning cryptos is making their citizens completely despondent and falling behind, and their whole system despondent and falling behind. So to me, that's the key thing we're going to look at from the future. And U.S. regulation is a big part of it. And I fully expect that the U.S., like Churchill says, will do the right thing when pushed to the end or to the wall or something. But the U.S. will, I think, do. I'm obviously a hopeless optimist, but we're seeing some really good discourse from people. Like, you might not disagree with them, might not like him, but Ted Cruz making some good points about, and U.S. regulators. And the bottom line is simple: there's a lot of votes, a lot of jobs, and this space is increasing U.S. Dominance and ability to keep the world protected from regimes like China. And I think our regulators are going to figure that out and realize, okay, let's just not mess it up. Let's regulate it like we do banks, primary dealers, the internet, and let it run. Let free markets prevail. And I mean, the jobs and the creating this country are amazing. That's going to be a shakeout. It always does. And like, I have a son who's he's a programmer. I'm like, hey, you can get paid a lot of money right now, a crypto firm. If they fail, who cares? At least you had a couple good years. You learned a lot. To me, that's what's the key thing is it's all about positive votes. The U.S. leading the world in free market capitalism. I'll leave you with this: crypto is the one of the most unique example of free market capitalism I've ever seen. And guess which currency they've gone to as the global reserve currency? The dollar.
Right. And I think the dollar's here to stay in some sense as well. And I think it'll work along with Bitcoin. I mean, would you agree in that sense?
I didn't hear the whole question.
Do you think dollar and Bitcoin will coincide with each other? And
oh, sure. Let's look, absolutely. Let's look at, first of all, you need a currency to trade and exchange and to buy and sell things with. An incentive to not just stick that currency on your mattress and have it appreciate. That's what the dollar's perfect for that. Let's just look at the current trends. The world has gone for the dollar digitally in crypto assets. Fact. Is that going to reverse? No. So here's the compliment. That's already happened, global, digitally, organically. China, part of the reason they banned it is that it's driving them nuts. The fact they have to pay for commodities in dollars is driving them crazy. But what's also happening is Bitcoin is becoming a global digital reserve asset. Now, you might want to buy and hold it. And so some people who think, I don't ever want to sell this, like Michael Saylor, and maybe leave it to my grandkids and give it, if it fails, big deal. But if it works, it's something you're never going to want to sell. So to me, they're perfect complements. You don't want to spend Bitcoin. Maybe when it gets to a plateau, who knows when that is, and it locks into a lower volatility range and it stops appreciating like it has. Sure, maybe. But until then, it's in a price discovery stage, and it's a perfect complement for the dollar. And that's just a key fact of what's been happening. That's one of my rules: extrapolate the current trends, expect them to see if they're going to continue or reverse. Why should they not continue? And that is dollar gaining dominance and Bitcoin replacing gold.
There you go, guys. There you have it. Great interview by Mike. You know, we learned a lot the last 25 minutes about Bitcoin, what's going on. Mike, it's a privilege to have you, you know, on this channel. Is anything final you'd like to say?
Oh, that's it. Well, first, I'd like to say I love your shirt, that hat. I mean, so I'm from Chicago, and my wife, I lived in New York. I worked in New York the last 30 years. When she says sometimes, they say, "Oh, you've gone so New York," because you know it's not. It's such
on pictures, yeah.
No, it's cool. But so now I'm in Miami, so I'm going Miami. And the thing about here is it's just cool, low tax state, major bias towards tech and cryptos. Wow. And that's what's happening in the world. The world, I think, is realizing that you have to go with positive forward, high tolerance, places that have high tolerance for different aspects and low taxes. And here I am. So the rest of the world's kind of doing that.
Same in Texas as well, I would imagine. I think Texas is opening.
Yeah, Texas too. Yeah, Texas is crushing it. Texas, we in this country, we view it as like a country. It's kind of a joke. You know, if you know, people worry about sometimes global security. I'm like, are you serious? All you have to do is send in Texas militia, and we'll take out any enemy. It's just, Texas is and the rule I learned in commodities is you don't mess with Texas.
There you go, guys. Thanks a lot, Mike. I appreciate to have you. I hope you enjoyed this educational interview about Bitcoin. None of it's financial advice. It's all purely education. So take it as that. I'm just a guy on the internet. So, Mike, thanks for your time. And let's see what Q4 is going to bring.
Great. Thanks for having me. Pleasure meeting you.
Buddy. Take care, Mike.
Cheers.